forecasting the week ahead. I'm Dale Pinkert. I'm going to share my ideas of what I think is going to happen this week, and keep in mind it's a fairly big week, although the BOE may not have huge impact. I would like to pat myself on the back for being right. 3 shorts in a row on cable. First couple were trades, but they were good for 100 plus pips. This one so far 160. We date a lot of things. We don't marry things in FX. This one you may want to date for a few weeks, though. So I'll get to that in a minute. I want to be collaborative, so it's important to me that you not only understand or have an idea of what to trade, but the whys behind it, the justification, the technical reasons. Better to have more than one, to have confluence of technical reasons to do so. But you'll notice I talk a lot about 3 drive formations. And if you're patient and you just wait for those, they do show up on multiple time frames. So again, welcome to Forecasting the Week Ahead with me, Dale Pinkert. So as always, we begin with the dollar index because you have to look at the basket and then you break it down relative strength and weakness among the different pairs based upon correlation work and which is leading. We want to be long the strength on weakness. We want to be short the weakness on strength. So let's move ahead with the dollar index. As you recall last week, I was in an either-or mode. Still believe that we're going to break back down under the 93 handle. I was open to the potential of another high coming that we may not confirm. There'll be divergence. You may want to write these numbers down on the Dixie. I think between 96.50 to 97 on any further strength, possibly into the QE that may already be in the market, that we get maybe one more low in the euro. Looks like there could be a 3 driver setting up there. So my bias is now for a continuation to finish this wave off up towards the 96.5 to 97 level. So that's anywhere from 100 to 150 pips from there. I believe that's going to be a dollar selling opportunity, and we're going to take advantage of that by seeing which ones, if there are any, putting in higher lows. That's going to be our preferred long candidates for any reaction and correction in the dollar that I think will take place after we get towards this 96.70 level. Taking a look at risk on continues. We had a low sell-off in the S&Ps on Friday, and we're recapturing a majority of the losses. Looks like there's another high coming. As you've known, if you've been following my webinars here, that I'm correlating dollar strength with equity strength, especially in the U.S. as money flows into U.S. dollars. They buy U.S. dollar-denominated assets. They're not buying the bonds, but they are buying equities. So U.S. dollar-yen correlating positively. A weaker yen, risk on higher stock prices. So with the dollar poised for one more high and then a potential correction, I think the S&Ps are in the same position, which means there could be some more upside left in the yen, but then a correction could ensue. Taking a look at the crude oil market, which I correlate with the Canadian. Been looking for a correction, descending triangle there. We'll see if crude can continue to hold these lows. Really acting pretty good. This was something I alerted you to if you followed me at the bottom at $45. You know, we've had some consolidation here, but we're still holding higher lows here, and this may have just been a correction, a pullback, and this could have been a $10 move, corrective, worked off a lot of the overbought condition by moving sideways, and if we hold Thursday's low, next move could give us $60 to $65 crude. That also is going to be dollar supported as it's a petrol currency. Should be negative for USD CAD should this scenario unfold on the long side of crude. Give me a Y if you're with me and you understand the correlation. As Canada has become a petrol currency, So I called this bottom, said I think we're going to put in higher lows. So far that's the case. Decent day today, and perhaps once we clear this 54 level, we could get equality. This was $10, so from here, say 47, that could give us $57 to $60. And then if you want to get real bullish, you look for some type of extension. 1.618 is one of the more aggressive extensions. That would be $16 from, say, here. That now you're talking about $63 to $65. Equality is going to take it a little under 60. So crude looking okay. Gold was trying last week. It was turned back at 1220. And those of you that follow me, what do I correlate gold with? What currency pair that I talk about every week? Any guesses? You're correct, the Aussie. So the Aussie looking vulnerable. It got turned away from the 200-day gold. This looks like so far just a bounce. Still nothing compelling on the long side. I did tell everyone back at the end of last year I liked it, but then at 1300 said we're going to at least get a pullback. This may be more than a pullback, so we'll see what happens. Still no compelling reason for me to want to buy it here. Feel a little late getting short. So a similar feeling in Aussie. When the dollar index makes a new high, should that forecast manifest and we get that move in the Dixie to 96.5, I'm going to be curious to see if Aussie holds the lows. I think Kiwi will. Maybe Aussie doesn't. So that's my take on the outside markets that I correlate. We covered the S&Ps, which have a lot to do with US dollar yen and risk on. And we talked about crude, and we talked about the gold. So those are the outside markets that you want to begin to follow, trading the pairs that correlate with them to give you some type of feeling if they're in sync or showing relative strength or weakness to the outside markets that they correlate. Give me a Y if you understand it. And a Y if you see the value in doing it. Okay, so with that, let's move on to our individual pairs. We always start off with Euro USD. So last week we had this big break in the Euro. Here we were. I was actually more bearish the pound. The Euro did work to the downside, but here's what I'm talking about. So I was neutral the Euro, saying it was a little early to buy EG, that it should make a new low, which it has. But I'm now thinking EG is turning. Here we are. This was Sunday night. Massive divergence on the 1 hour time frame. On the 4 hour time frame, glaring divergence. The daily never negated this divergence. Got a little bit under 30. So now I think at the minimum we're setting up for some type of bear market rally in EG. It's going to be interesting to see if Euro makes a new low. I suspect that EG does not. So let's get back to the Euro and why I think there is a possibility for doing that. First of all, we're not that far away from new lows. But a count and something that I pay attention to is what? Here's drive 1 confirmed on the real simple indicator. Here's drive 2 diverged above 30, rally. Drive 3 coming. Let me give you a ballpark number of where we could go to, just based off the symmetry of these lows right here. Third drive territory is going to come in around this 111.40 level. It's going to be important to see if it holds above 30. If you want to counter trend trade it, I expect it may end up outperforming the pound when the dollar does peak. Here's your 4 hour look. Had some divergence here. You know, perhaps we get one more washout to new lows. It's deepening up here right now. Either way, I think that we're in the process of putting in some type of bottom. The most bullish thing Euro Pound could do is not make a new low. This is Euro right here. Euro Pound. See, we're not that many pips away on the Euro. From this low was 11.59, so we're only about 24 pips away from taking out that low. But when you look at it, this 3 drive pattern will be enough to make new lows, 10.97. That it's possible that the Euro holds previous lows around that 10.97 level right here. These lows that were put in after the Greek election was 110.97, and I have some 3 drive support around 11.5, which would mean actually a higher low. And then even if we made a new low and took out the stops under this low, you could see that the Euro will not confirm this low. It could be a nice divergence, pretty glaring. In fact, now that I look at this, we should get a new low Euro. So that's going to be interesting to see what kind of new low we get and see if Euro Pound holds. Okay, so I didn't know what to do with the Euro last week, but this really demonstrates a point that I was neutral of the Euro. It actually looked a little weaker because EG was moving down, but I had a better chart formation and setup in the pound. Instead of guessing like I would in the Euro, it could have gone either way. The pound, I stressed the potential, and this was the 3rd winner in a row. Okay, we took a short here on the 3rd drive. It was a nice trade. I said, don't worry, there's going to be another opportunity. There was another short here for a quick day trade, and then last Wednesday I said one more high, and I believe the 4-hour will stay under 70. I talked 5.5 to 570. The high was 551, so I was spot on the range. So now you have 190 pips going home from Thursday. So this was a big trade. Based upon what I'm seeing in the EG, I think that the pound could work lower and perhaps outperform the Euro to the downside. There's going to be some support. If you do a fib retracement off this bounce, let's take a look at that. But right now, you've had 3 trades in a row, good for between 100 and 190 pips. Trading this return line on 3 drive formations here, here, and here. So although the trend was rising because of our work with the real simple implicator, I was able to identify divergences, then told people don't worry about it. Again, getting back to the fear of missing trades, that if you miss the first short, there was going to be another opportunity. In fact, there were a couple. So here was one, here was another one, and this one turns out to be what could be a more significant reversal. But if you're a cable bull, you're probably looking for a place to get long. Here's 5150 confluence. Just want to give you an idea with some fib retracements. I'm open to the fact that the pound can actually take out these lows or retest these lows under the 150 handle. But here's retracement levels to pay attention to in the coming days. And right around the 61.8 level, 51.80, 52, looks likely to do a little bit more short covering if you're short this one. I hope everyone took to heart my analysis on the pound over the last couple of weeks, because we had this trade, and I said don't worry, there'll be another chance, and we had this trade, and then I said one more. And the reason was because back here at this this short up against the return line, we were over 70. So I said on Wednesday that I still think we could get one more push up to 5.5, and this time the RSI should stay below 70. That would be your sell signal. Here's your candle. So even if you sold below the candle, you got short at 540. You're still looking at 190 pips from there. It's doing nothing right. Nothing wrong with maybe perhaps considering taking half, but it looks pretty negative to me, this action right here. If you want to really tighten up your stops, I don't think we should trade back above 154, back above previous support being here, this 154 level. I don't think that we should take out 420. If so, then maybe there's a fib retracement coming to 55, but this one I think you could sit with for a while. I think you have a lot of people long, and you know, here's another area, 2.5 to 52 might be some pretty good support, and then there'll be another rally to consider fading depending upon how the dollar index sets up. But some real nice trading activity from here. Called them all out. I had one line that kept working over and over and over again, and the classic setup was on the final drive. The 4-hour never took out 70, and the 1-hour did not either. So you had harmony between those two time frames that makes the signal even more powerful. Because you could get daily divergences that you could lose a lot of money until they line up. Very important to have the 1-hour line up with longer term time frames if you want risk management of risking, say, 70, 80 pips per position. Give me a Y if you're with me. Our other big trade was the Euro Aussie from last week. I'll get to that in a little bit. Everyone clear on where I'm at on the Euro? Potential for 3 drive to a bottom formation. There could be daily divergence. Here we go. We're not that far away from last week's lows, but still 80 pips away from new lows, which could be possible, but you're going to have glaring divergence on the daily, potentially divergence on the 4-hour. So this will kind of line up with a spike up in the dollar to that 96.5, 96.70 level, and then the correction. I'm leaning towards there could be some type of bottom pick setting up here in Euro, either at a slightly higher low above the 110.90 level, or potential washout that's going to set up something nice too. And what you need to monitor is on this next break in the Euro, this was a low Friday, and on EG, this was a low from Friday, and this really doesn't look threatened. If they get to the Euro and make new lows, I suspect that all we'll do is some type of fib retracement, and then the next time through the 73 high, we're looking at 73.50 in EG, and then we start clearing this 73.50 level. Here it is again, 330. Then you're talking about 74.5 with the potential of even a move back towards this 76 level, which would just be a correction off this massive decline. So looking to buy breaks in Euro Pound, especially if the Euro makes new lows and Euro Pound does not fails to make new lows, that's going to be a market tell. Give me a Y if you're with me and understand the market tell of Euro making new lows. We've already about to threaten Friday's lows have already been taken out. Okay. And the Euro Pound is not, has a much better look on the 1 hour. Look at the difference. It's hardly giving up ground. So it's going to take a lot of weakness in Euro itself, and I think that's because we've diagnosed the pound as being the preferred short. And on bounces, the pound's going to be weaker than the Euro, and on declines, maybe as weak or even weaker. Give me a Y if you're with me. That's the critical nature of diagnosing Euro Pound correctly, whether you trade it or not. When Euro Pound is trending down, your preferred short is Euro on strength and cable on dips. And if you're looking for a bottoming formation in Euro Pound, your preferred long shifts from being the Euro being the pound to being the euro, and your preferred short shifts from being the euro to being the pound. Give me a Y if you understand that teaching and if you've been implementing it. Pretty important to me. Because when you think about it, everyone's seen that singing competition, American Idol, and you could be a great singer. And if you choose the wrong song, your performance will be affected. So in our business, it's not song choice, it's trade selection. So if we can have tools that tell us what are your preferred shorts, because you can see that they're relatively weaker than other pairs, or you know your preferred longs because they're holding up better on declines and moving up faster on advances, your trade selection will be that much better. And besides the trades working, if your trade selection is good and you're a bit premature on the trade, it will be more forgiving than if you short the leader by shorting the laggard, or by buying the leader instead of buying the laggard. Give me a Y if you're with me on the relative strength, putting that to work for your trade selection. Okay, so the yen's been an enigma to me. I mean, the Dow's making new highs, and you can't fight it. We're going to make new highs in the dollar. We're probably going to get new highs in the yen. A lot of people talking 125. I caught this short, booked it. I'm not long. I have a hard time wanting to reach for it. Daily looks like it's going to threaten this high right here. So if I don't know what to do with the yen, what should I do? That's right. I don't need to know what to do with the yen. I knew what to do with the pound last week. I knew what to do with the euro Aussie last week. Correct? So you don't have to be right on 10 different pairs, my friends. Fellow trading warrior brothers and sisters, it only takes one. So again, getting back to some coaching. Limit your view as far as trading to 1 to 3 pairs. Get to know that pair like the back of your hand. Every critical technical area, whether it's MAs, whether it's momentum indicators, whether it's pivot points, become familiar with it so that when the market is in those critical areas, you're not analyzing on the fly. You have a plan. You plan your trades beforehand. You do not trade impulsively, and you need more than one reason to take the trade. So on every pound short that was recommended over the last several weeks, people that were at the webinars were prepared before the market got to that area what type of price action was necessary to take advantage of short positions. So you weren't taken by surprise by these drives up towards that wedge line. You had the wedge line. You had the RSI readers, and you were prepared to act when the market offered that price action opportunity. Give me a Y if you're with me. Give me a Y if you caught any of the short-sided pounds over the last several weeks, which it was not easy to do for most because the trend, most people are saying the trend was up. And despite the trend being up, at least short-term, we were able to take advantage of counter-trend trades. So I ask you, if we were able to take advantage of counter-trend trades when the trend was up, what do you think we'll be able to do when the should and if when the trend, short-term trend, begins to shift in our favor as it's beginning to do now? So when it's not in your favor, they're quick trades. You know, you're happy with 100 pips. You're happy with 150 pips. You're not looking for 400, 500. But when the trend shifts in your favor, that's when you can look for the 3, 4, 500 pip trades. And I believe that we're entering that potential scenario now, just like we did in Euro Aussie last week. And this was an even bigger winner than the pound on an individual basis. I called your attention to this little rising wedge that we had here, and talked about in here Monday to get short at the 46 level, and this was a big trade for 300 pips. Okay, now I talked about long-term bearishness, that eventually I think that we're going to head towards the 140 level and break down. But short-term, the picture may have changed a bit. You should have 300 pips from that recommended short off this wedge line here from last Wednesday. Somewhat negative action here. I still think we're headed towards 140. But now if you're short, you need to get out of the way if we start closing back above 144.70. But how terrible would that be? Say, for example, you've taken half of your position off, plus 300. You want to see if, you know, I'm going to be right, and we're going to head down to the 140 level. That leads to big numbers on the downside. You know, you're talking 130 on a breakdown under 140, possibly 123. So if you want to manage the trade and give it room to breathe, you now trail your buy stop from wherever you had it here on this decline. There was no heat on this trade. And this was the second trade we caught. The other one was from 47 to 340. Talked about this short the week before. And those are two great Euro Aussie trades now. If you want to hold it now, you put your stop over 145. Okay? So worst case scenario is if you get stopped out, it's a 100 pip winner, and you've already taken partial profits from anywhere to 200 to 300 pips. Otherwise, I'm going to be looking at its potential to try and trade up here towards this 480 level again. But that's how I would handle it. Okay? Your first warning sign was down here. We were diverging on the 1 hour. So this is in the bank. I'm neutral right now. If you have more patience than me, you want to ride it, you have to have your stop above this high. It takes out this high, there's something else going on. Should have trouble back at that resistance level if it attempts to rally there. So I believe we also have the RBA in here this week. So for me, I'm going to wait for the RBA to do whatever they're going to do. You know, if they're going to cut rates, maybe, as I was saying earlier, I'm going to be interested if the dollar index makes new highs to see which currencies are not making lower lows. And Aussie is a possibility. We haven't made new lows. We've held this 76.24 level going back to the 3rd of February. So it's going to be interesting to see what the Aussie does on an RBA move, and the Dixie going to 96.5. I suspect that the Kiwi is actually acting better, much better formation on this rally compared to the Aussie. Look at this. Much bigger advance, especially later on. This has been more sideways and still could be vulnerable. So the way it looks to me is Kiwi potentially could pull all the way back to 73.29, and that would be a higher low, and that's almost 200 pips from here, whereas the Aussie trading at 77.70 is 140 pips away. So probably more potential for the Aussie to flush out stops under these levels, and then it could end up being a very good buy. Similar to gold, gold didn't have that great, the action's not that great, so perhaps there's one more washout capitulation move in the Aussie, and what I would be looking for is if Aussie makes a new low and Kiwi doesn't make a new low, your preferred long is going to be the Kiwi, because it's not making a new low and it's demonstrating relative strength. So plenty of ideas and things to consider. Really tread lightly, especially if we wrap it up Friday with the NFP. To me, that's a roulette bet. The ECB may be so as well. And I want to thank RoboForex again for the opportunity of sharing my analysis and ideas. I'm happy that a lot of things I've been saying since I've been with RoboForex manifest on the screen after I say them. It's always been my mission to add value to your trading experience at RoboForex.com. So I'll be back with you on Wednesday. Good hunting in the meantime, and thank you very much for your attention today.